So now that the media has joined the party and started to talk about these new price changes, the new fees basically, LLPAs that Fannie Mae and Freddie Mac are charging to people with higher credit or larger down payments, there's a lot of confusion around what that exactly means. I'm going to clarify that in this video. Do me a favor before I dive in, smash that like button. And if you're not already a subscriber to the channel, please do so you get more content like this. So check this out. These new LLPAs, that's loan level pricing adjustments. An LLPA, it's something that's been around forever. LLPAs were basically risk-based pricing, meaning that the higher your FICO score and the larger your down payment, the lower the risk you were to Fannie and Freddie and the lower the fees they charge to do a loan for you, essentially. The way that it works now is that not all scenarios play out that way. In fact, the LLPAs for some scenarios that in the past would have not cost you money, they're now going to cost you more. And in other scenarios where you are lower FICO score, especially it's the lower credit score with the low down payment, that area saw massive reductions in the LLPAs that they would have normally paid. So what we've seen is basically a little bit of a shuffling or a rebalancing or redistribution or whatever you want to label it with of the fees that get charged to different credit profiles and different down payment profiles. So this chart shows the new versus the old loan level pricing adjustments. It's a heat map basically. The red means that prices went up, the green means that prices went down. From left to right is down payment percentage, so the left's larger down payment, the right's the least down payment. The higher up on the chart, the higher the credit, the lower on the chart, the lower the credit. So you'll notice on the bottom right, which would be the lower credit, lower down payment, that's the greenest part of the map. That's where the pricing's improved the most. And then if we go all the way to the opposite side of the chart, basically those are like the high credit, high down payment. There's actually no changes to those folks. But if you go into the center of the chart, into the red, into the danger zone, that's where people are getting hammered for having better credit and 20% down. Now you'll notice on the bottom two levels from left to right all the way across, there's pricing improvements, meaning that the fees that people with those credit scores and those down payments would have paid are less by that amount. Whereas when you get into the center of the chart, where you're looking at basically like people that have a 720 or higher FICO score and putting anywhere from like 25 to 15% down, those people are going to pay the most. In fact, the person that's putting 20% down, they're going to have the largest price shift, meaning that they're going to pay more for what they would have got prior to this, while subsidizing, essentially offsetting the cost into the other parts of the heat map. So let me put this in layman terms. Let's say that the interest rate that you would have got if you had a 740 FICO putting 20% down was 6.5% with no points. Well, after this change, you see how it says minus 0.75? That same rate will now cost you 0.75% of your loan amount in the form of a fee. If you didn't want to pay that fee, then you'd have to take a higher interest rate to not have those points. Whereas let's say you had a 620 FICO score putting 3% down, that 6.5%, whatever it would have cost you to get, well, it's going to cost 1.75% less of your loan amount after these changes. So it doesn't necessarily mean that people with lower credit or lower down payment are going to have a better interest rate than somebody with higher credit or higher down payment. It's just that the fees that people with higher credit and higher down, those have gone up essentially, and the fees have gone down for those with lower credit, lower down payment. So what do you guys think about this? Is this good risk mitigation? Is this crazy? Do you think this is going to work out well? If you guys got questions about this, put them in the comments below. Maybe I'll make a video about it. See you on the next one.